Hi everyone, Tom here with your Medway property market update for December. November was a quieter month and that's exactly what we expected with the budget speculation hanging over the market. Stock levels dipped slightly, new listings slowed right down and both buyers and sellers were waiting for clarity before making their move. In Medway last month there were just over 1,770 homes available for sale, which is below this year's average. Only 399 new listings came to the market, the lowest we've seen in 2025, and 287 sales were agreed. We also saw 165 price reductions, averaging just over £17,000, which shows that sellers are having to work a little harder to tempt motivated buyers. Nationally, Rightmove reports that new seller asking prices dropped by 1.8% in November. That's a bigger fall than usual for this time of year, simply because there are more homes available and the budget uncertainty added a layer of caution. Reductions on existing listings are also at their highest level since early 2024. The higher value end of the market has felt the most. Sales of homes over £2 million are down 13% year on year, and the 500,000 to 2 million bracket has softened too. Under 500,000 has been much more resilient, with sales only 4% down on last year. Zoopla's figures tell a similar story. Southern England has seen its first price dips in 18 months, mainly due to more stock and buyers holding off until the budget. Demand is 12% lower than this time last year, but the number of homes for sale is actually up by 6%. Once the budget was out of the way and the threat of extra property taxes was removed, confidence started to improve, and that's likely to feed into stronger activity in early 2026. Savills also highlight that while the headlines look steady, the prime markets above 1 million have slowed more noticeably, but their mainstream forecasts remain positive, with UK house prices expected to rise around 2% next year and stronger growth predicted in the years ahead. So what does all this mean if you're planning a move? If you're selling, realistic pricing and a strong presentation remain key, especially with buyers having more choice. Homes under 500,000 are still attracting really good interest, provided they're positioned correctly. If you're buying, you've got more stock to choose from. Affordability is improving thanks to mortgage rates falling from last year's highs, and there are some good opportunities in the mid to upper ranges where activity has slowed a little. Overall, November's slowdown is nothing more than seasonal behaviour combined with pre-budget nerves. Demand is still 4% higher year to date compared to 2024, which is a strong indicator for where the market is heading. Looking ahead to 2026, it's shaping up to be a much more confident year. We've got stable interest rates, clarity after the budget, and the usual new year bounce as new buyers and sellers come into the market. As always, if you want advice tailored to your home or your moving plans, just give me a shout and I'll be happy to help.